Hello and welcome to India Market Open. It is going to be an interesting market open. It is going to be an interesting day of trade. Lots of earnings reaction, guys, but all eyes will be on the monetary policy meet tomorrow.
Most certainly, big thing. But, you know, just the kind of day that we had yesterday was quite amazing, all-round participation, etc. Yeah. So, hey, maybe the market is saying that we know the monetary policy won't have too many negatives. Maybe that's what the market is saying.
I think the expectation is positive almost.
We're betting that the monetary policy, post-policy announcement conversation and press conference is going to be dominated with more questions on Paytm than interest rates.
So, no, I think he will make it amply clear. Okay, this is this, that's it. They're going to issue a statement.
But questions, what are they going to do about? Yeah. So we'll wait and see that. But yes, Indian markets had a fantastic close yesterday and showed that resilience and strength. No negative global cues coming in either. So US markets were up. No fireworks per se, but rate cut hopes, positive quarterly numbers are maintaining that momentum on Wall Street, and you're seeing that play out. Even on the bond yields, nothing too negative. They're flattish in a sense, a little bit of a dip, but then have recovered as well and have remained under the 4.1 mark after a bit of movement to over 4.1. So no major movements there per se. On crude, there is an outlook that crude prices are going to remain firmer this year because the big factor that was keeping crude prices depressed, which is over-expected production in the US, will now peter out. That's at least the forecast that's coming in, that US crude production is going to peter out, and plus the Middle East crisis, etc. So expect crude to remain firmer. Asia is one that we should pull up because Asia was showing largely positive cues and a good robust move in the morning, apart from the Nikkei, which was in the opposite direction, and some cooling off there on one of the markets in Asia, which have been very, very hot. I'll quickly pull up fund flows before I hand it over to Niraj, because the big FII numbers that we were expecting to see in 2024 have not yet started. It's still a bit of a trickle. You've had 3 straight days of FPI buying, and yesterday was a measly 92 crores. If you look at the kind of volumes that we're used to. DIIs, though, did sell yesterday, about 1,096 crores. Even so, the markets were largely positive, and Niraj, IT stocks were the stars.
Yeah, on the trade, it's just very difficult to figure out reasons how they can keep on continuing, wherein the commentaries, I know HSBC said that they found positives than negatives, but frankly, the commentary didn't have too many positives as well. So maybe the valuations favor. But, Tamanna, you're right. I mean, the fact that we started off with the Bharti Airtel being the top gainer, and then IT came to the fore, other sectors came to the fore, just showed how there was this very high all-round participation. Maybe the PMI data helped the momentum as well yesterday, who knows, but just all-round participation. And we love trending days, don't we? All of us love trending days. The market, the index yesterday was a beautifully trending chart, went up all the way till the end, closed at the day's high, and that's just beautiful for the next day. Unless something really changes dramatically in the world, you typically have a follow-up action coming in the next day like this. So, the close at the day's highs, the breadth, and the fact that the top 10, 15 gainers had everything from life insurance to Larsen & Toubro to IT to what have you, metals, everything participated, which is quite stunning really from a day's perspective. And not that too much was anticipated. Yesterday, all of us discussed that we don't expect too much of a downside.
It's supposed to be sideways.
Yes, sideways too, and we had this kind of a day. So that was quite stunning. I spoke to two fund managers who are great IT investors per se, and asked them yesterday about whether they would go in and buy lock, stock, barrel, post-market of course, whether they would go and buy lock, stock, barrel on IT. And all of them said, okay, listen, there are enough places to buy in an overvalued market. We don't want to take a bet on something which is not showing the promise of growth right now. The bet on valuations being cheap and therefore buy them in the hope that something will turn, at least they were saying that they are not constructive about it.
Sectoral rotation. Maybe that's what played out yesterday.
Or the HSBC note. Who knows? Yeah. Maybe a factor of few things.
Talking about notes, Morgan Stanley's note on the oil and gas and OMC space, where they said there's headroom left. And apart from IT, OMCs have seen a very sharp up move. Now, re-rating round the corner, is it a valuation game, is anybody's guess. But the brokerage clearly believes that this is a space that could continue to do well.
Yeah, and if a lot of people say, right, right? A lot of Gyani people say, not Gyan, but whatever. Gyani people say.
The other Gyan is a different Gyan.
That crude is a deep insider, right, of what's happening to geopolitics. If crude prices are not moving up, per se, we know that that is not having a stress on geopolitics. Therefore, slight more predictability for OMCs. Maybe that is also playing out. Who knows?
Just talking about HSBC note, and I'm sure we'll come to it later up. There's a HSBC note on Indian telcos today, which we should keep an eye on, considering their note on IT, had such a positive effect. So they seem pretty constructive on telcos as well. And Bharti's numbers were not half bad at all. So that's maybe one space to watch.
Too. And sorry, just one last thing, because I know there are a clutch of stocks today, but just one last thing from mine. Just looking at scanning the numbers in the consumption space. I know Britannia, you could argue a bit of a dampener relative to what was anticipated, whatever. But consumption numbers selectively are looking very robust. We saw that in Dabur, we saw that in GCPL. Somehow Pratap Snacks today has also shown that. Who knows? I know we have
Nestle later on today is expected
Nestle later on today. Well. And I know we have a conversation with Sushant Bansali of Ambit about rural consumption turning the tide as well. Pranjul has been on record saying that. So let's wait and watch what happens to consumption. Can staples make a bit of a comeback? That remains a sector to watch for sure.
I think a few quarters out for now. At least that's what
I think
management
you're more positive on consumption, and more, I would say more optimistic on consumption.
I'm hopeful that it comes back, because it really needs to. At some point of time, FMCG stocks need to make money. They've just not done that for a really long time.
No, and talking about even OMCs, I think Morgan Stanley has said that earnings upgrade as well as re-rating in these stocks with multiples rising to levels seen in 2014, 2017. So you're literally going back 10 odd years, and that could explain why some of these sectors have been doing well. But like Niraj said, the good news is it was a beautiful day of trade, broad-based rally. Even better, there was no selling seen at higher levels, which is what we've seen all through last week in trade. So I think apart from the fact that we held out is a huge trigger coming in for the markets. But and that's the Nifty. And this morning, like Tamanna highlighted, positive global cues. So we've got enough and more to expect a new closing high, or at least a new high from the get-go in early trade. 135 gap up is what we're anticipating in trade. Stock trade will be all about earnings this morning, at least a few that I've got. We referred to Britannia in our trade setup, but just to quickly take you through what those numbers are, revenue was more or less flat, up about 1.5% year on year to come in at 4,256 crores. EBITDA also remained flat, marginally high by 0.4. Margins have also remained flat at 19.3 versus 19.5 that was seen in the same quarter last year. Profits, though, and I think that's what you want to keep in mind, were down over 40%, but this was on back of a higher base last year. So there was an exceptional item in the last year, same quarter, and that's why you're seeing profits seeing a big decline. When you deep dive, it was literally a base effect that played out. A couple of things the management has said. They've said that the competition has intensified. A number of unorganized players have entered a number of markets, because of which Britannia had to undertake price cuts, but that has helped them maintain and gain market share, and also that's impacted a little bit of your margins in the case of Britannia. They've said rural demand still looks weak, so below what they would have liked, but that, of course, recovery is around the corner in the next few quarters. Their international business, interestingly, is actually done really well, and they've recorded a double-digit growth. So that's the story of Britannia. Rural remains weak, numbers largely flat. Profits have declined on back of an exceptional item that we saw last year. Well, keep the stock on your radar. It'd be interesting to see how the markets actually react to this one. Well, you've also got Nestle, like we said, that will report later on in the day. So two consumer names will be on focus. NLC... this government entity, interesting numbers. Their revenues are down 14%. EBITDA is down 34%. Margins have also weakened substantially, down about 836 basis points to 28 versus 37 odd percent. Net profit is also coming at 254 versus a loss of 396 crores. Now, again, this has got to do with what we saw last year in terms of a deferral payment that the company witnessed. Why NLC is mentioned this morning? The stock has been very active in trade. It was up 3% yesterday. It's up 26% for the month. And over a 6-month period, the returns are close to 200%. 140% to be precise is what NLC has done. So it'd be exciting. The stock will be in focus. Their capital expenditure numbers also better than what their targets were at 3,493 crores versus a target of 2,880. So NLC could see another day of big gains playing out. GSFC, again, a disappointment here. Revenues are down 43% at 2,007 crores. EBITDA is down 69%. Margins have also declined substantially. So not like they've already taken a hit on their top line, but even profitability due to lower margins has been seen for Gujarat State Fertilizer. Net profits are down a whopping 72%. The stock was up 4.5% yesterday. I'm not sure what the euphoria was about. I don't know if Niraj or Tamanna know anything on that. But a couple of factors with regard to GSFC. Sales and profit was impacted by downward revision in subsidy rates. Their sales volume grew about 14% year on year. Industrial products were also impacted by lower sales realization. Well, the outlook not looking very bright. There's an increase in MRP is very unlikely in the next 2 quarters. And while they aim to grow at 10% in the fertilizer segment in FY24, it is going to be a tall task or a tall ask for Gujarat State Fertilizer. But you know why the stock was up 4.5%? Weak, very weak numbers, but markets were, I guess, part of a broad-based rally.
Yeah, I guess so. But, you know, chun ke liye hai Samina ne. All the stocks which have had a bad quarter, Samina has had it all.
No, Britannia is a 50-50, you see.
Okay, I have some which have had a good quarter. I mean, I can't hazard a guess on any fertilizer company, but ahead of general elections and ahead of the next budget, you might see some momentum there, and the anticipation that subsidies, etc., or push will increase. But okay, let's start with not everything is doing well or has positive news on my list, but Brigade definitely seems to have had a pretty solid quarter. So it's a beat with a robust top line. The profits have increased. In fact, a 30%, 31% increase in profits. Revenues are up 43%. EBITDA is also decent. You've had some margin compression there, but that's due to higher land costs, and that's a key factor to watch. We're going to be speaking with the management also later on the show, so stay tuned for that. But land costs for Brigade have grown many-fold. So from about 70 odd crores to 1,050 crores, and that really may have pinched, but it's also telling you about a robust pipeline in place, so may not be seen as a negative. The inventory levels have also gone up, so it will be interesting to know what the plan there is. But suffice to say, their pre-sales numbers are good, with a growth of about 22%. So Brigade is one I would watch out for. UPL again on, I would say, the thumbs down list, and Moody's agrees after a clutch of brokerage reports really wrote down UPL post a disastrous Q3. Moody's has downgraded the company's unsecured ratings to BA1 from Baa3 on basically the deterioration of the agrochem business, and those fundamentals don't bode very well for UPL. The stock had some recovery yesterday in trade after really getting beaten down, but we'll see what happens today. Biocon is the other one. That stock has been actually flying, and the pharma space has been strong overall. Biocon was up nearly 5% yesterday, but the news today is that it's received a tentative US FDA approval for a drug called, or a tablet called dasatinib. This is used to treat a type of leukemia in adults who don't respond to any other medication. So fairly niche space, decent, 2021 sales figure for the US market. So Biocon's the other one I would watch. And an interesting sort of steady trend in pharma stocks and the healthcare space overall. We keep saying it's a defensive play, but it's carried on for a while.
Yeah. And Biocon in particular, one of the last 7 days or 8 days has actually had a serious up move. So let's see, but very interesting move for that one. Some other stocks, and 3 from mine, and I'm sure there are lots more. By the way, there are a lot of result reactions that we'll try and talk about, but very quickly, Godavari Power and Ispat, the first one on my radar. Revenues were down, by the way, but what an operational beat by Godavari Power and Ispat. 1,274 basis points increase in margins, 25.28 versus 12.54. This is what happens when cycles turn a bit. We saw the little bit of an example with Shyam Metallics as well. Similar business, Godavari Power and Ispat, pellets, but just the kind of move that we've seen. And by the way, across the metal space, I think there is being gains. It calls for a discussion that it has cut sometime, maybe tomorrow, maybe day after. We'll try and do something on metals. But this was a blowout margin performance by Godawari Power and Ispat, as a result of which, despite revenues being down 10%, the PAT was up 79%. So strong show by this one. I thought Berger was interesting. 7% uptick on revenues, but margins expanded 367 basis points, as a result of which a 50% uptick in PAT. So watch out for this one. But the one that is 50-50 because of the prices having eroded already is Navin Fluorine, and that's the third stock on the radar. Now, a very disappointing quarter, you have to admit. Revenues down 10% at 501 crores. The estimates for 522. You could argue that's largely in line, but EBITDA down 51% at 75 crores versus the estimates of 121 crores. Margins down 1252 basis points at 15 versus 27%. The estimates were 23%. And don't get caught by this net profit number. I mean, by caught, I mean don't get swayed by this net profit number, because it's 78 crores versus estimates of 63, because there was another income, which was due to a sale of land. Had that not been the case, the bottom line numbers also would have looked very, very wobbly. Now, the thing is, most brokerages are saying that in the con call, Navin Fluorine has spoken about deferral of a number of projects, and that might actually impact earnings Q4 or Q1 as well. So not a cheap stock, has corrected a bit, but who knows, just purely on the back of the numbers and the commentary around deferrals, there could be more in store for Navin. So watch out for this one in the session today. But you know, before we go to editor's cut, there are a clutch of other numbers and stocks that we need to quickly hash as well.
Just two from my end. Nykaa, it's a lady's favorite, so I want to mention it. The numbers
it's a brilliant.
And it's the earnings as well, not looking too bad. Slightly below what the street was expecting, but they recorded over 100% growth YOY in profits to post at 17.5 crores. They are making investments in their fashion brand, also looking to consolidate the business. But all in all, good set of earnings from Nykaa. And a quick mention on an update that came in right now. Angel One's average daily orders have risen 10.2% at 7.56 million versus 6.86 million last month. So we've talked about how the number of DMATs have added in the month of January.
Their onboarding also has been high, by the way.
Exactly. So new accounts being added, this clearly garners well for any of these capital market players. So while we've talked about how FIs were sellers, DIs have been aggressive buyers in Jan, and those numbers now reflecting with brokerages too.
Just on Nykaa, just a quick point, HSBC not too hot on it. Excellent in BPC, but their bet on fashion
is not convinced.
How much it's going, to bear fruit is a question. I would just talk about two city notes this morning. Sell rating on CAMS with a price target of 2175. Even though PBT grew 18%, led by higher revenues, there are some concerns over there. Higher than expected MTM is an upside risk. Also on Bata, they've reduced their target to 1,110 versus 1,340 earlier because of a muted demand environment, which has led to a mid-single-digit volume. Maybe Lemon Tree also one that we can track through the day. Not very great numbers for a space which has been sizzling.
And on a quarter when EIH and Indian hotels have done well.
Yeah.
But by the way, since you mentioned Bata...
Lemon Tree as well on that note.
Yeah. No, so since we mentioned Bata, just one thing. The note says that they're cutting their 24 to 26 revenue estimates by 5 to 9%, but the PAT estimates by 15 to 31%. So, and despite this, they have rolled forward the P multiple and still valuing Bata at 33 times. So it's not that Bata is being valued at market valuations, still 33 times, and despite that, and this is after a 31% reduction in PAT. So no surprise there that the target price has been revised from 1340 to 1110.
In fact, Bhansali's note talks about footwear and mass apparels and why those stocks could see a rebound actually 2-3 quarters down the line. So we will be able to explain a little more on those rural demand.
Yeah, but just very briefly, sorry, before we got to rush to editor's cut, 2 or 3 results that we haven't marked. Brilliant numbers from Anantraj. 47% uptick in revenues, margins up 310 basis points at 23%, and net profit up 58%. So that's to be watched out for. Zaggle Prepaid, new listing, very hot subscription numbers, PAT up 100%. Margins expand as well, so that could be interesting. And Tamanna pointed out, Dollar Industries is the other one, by the way, which has had a good number. But Tamanna pointed out Lemon Tree, weak quarter, EIH, very strong quarter, margins expand 800 basis points, PAT up 52%. So a lot of these stocks also will be in focus today.
Yeah, absolutely. But more that you're going to talk about right now.
Yeah, more that Alex Samina and Tushar are going to be talking about. Alex, what do we have on the editor's cut today?
You know, I'm very tempted, Niraj, to introduce today's editor's cut as a boxing match, or rather two boxing matches, because we're talking about two sets of stocks. So let me do just that. Ladies and gentlemen, presenting for your not necessarily entertainment, but hopefully giving you actionable insight this morning. Two prize fights, one in the automotive space and one in the ER&D space. In the light blue corner, we've got Tushar Deep Singh, apologies. In the light blue corner, we've got Tushar Deep Singh. And soon in the dark blue corner, we've got Samina Nalwala to talk about Tata Motors. Unfortunately, see, I'm focused so much on
every day.
I'm focused on the commentary here, but so take that.
Sorry, should I move behind? I don't want to be caught in the crossfire.
Niraj is going to be the referee in this particular match. So we've got Tushar as well as Samina that are going to talk about Tata Motors and Maruti Suzuki this morning, because you might have heard, of course, that Tata Motors has eclipsed Maruti Suzuki on the market cap front. But where do we go from here? Which stock should you bet on, and what are the factors that will determine the fundamentals going forward? And then in another category, and we're talking about maybe the welterweight category here, we're talking about ER&D companies. On the one hand, you have KPIT Technologies, 5% yesterday, but in the context of the 115% it's gained over the last 1 year, it's not very much. At the same time, Tata Technologies, on all the metrics, they're looking comparable. Which one should you bet on? Let's start with Tata Motors versus Maruti Suzuki. Who wants to start? Who wants to throw the first punch?
I'm going to go because I think Tushar is going to shut me down very quickly. But very quick take on what we've seen, and this is out in the open. So there's no intellect here I'm bringing. All I'm saying is this is what's happened. It's a season of milestones, right? We had our markets become the fourth largest country by market cap in the recent past. In a similar way, you've had Tata Motors that has, for the first time in 7 years, taken over the market cap of Maruti to become the largest automaker in the country. Now, the combined market cap of Tata Motors and Tata Motors DVR is marginally better or higher than what Maruti currently quotes at. Look at what happened in history, right? In the last 5 to 7 years, Maruti was valued at some point maybe 7 times to the market cap of Tata Motors. So it's come a long way, now almost at par. Why are we seeing this with Tata Motors? I think that's the question most of our viewers want to know. And also, let's not forget, Tata Motors has done a 1,200 times return in the last 4 years, since calendar year 2020, years, versus Maruti that's gone up 2.5 times. So significant returns. And Tushar and me were discussing how a friend of his picked up Tata Motors at 100 rupees and now is laughing his way to the bank. But what's led to this shift? Sharp turnaround in business. Tata Motors has swung into a profit after many, many quarters of losses. FY19, in fact, is when they posted a 157 billion rupees of losses versus a profit that we are seeing now. Apart from that, that's of course Tata Motors. The outlook, which Tushar can tell us, is about the SUV, the JLR, so a number of verticals that are doing really well. In defense for Maruti, they seem to figure it out, right? I mean, we've seen that historically. We talked to the management. Their numbers are looking good. Of course, rural is struggling. They've got big plans on EV. Their margins up until this quarter have always historically been better than Tata Motors. Now, whether their good run continues, you can argue that. But in terms of just pricing, Tata Motors, and we're looking at price to book because their earnings have been all over the place in case of Tata Motors, has historically traded at 2 times, currently at 5.5 times, which means you're paying a 180% premium almost to pick up Tata Motors if you're betting on their future. Maruti, on the other hand, still trades close to its historic average. Now, that's the case. It's all about the future, but I don't know whether the risk-reward works in favor of Tata Motors.
All valid arguments in favor of Maruti. Great price-to-book numbers.
No, not going with it, are you?
Always the market leader. Has 3 times the sales of Tata Motors in the last 2 years. 42% market share for Maruti Suzuki to 14% for Tata Motors. But we forget that Tata Motors has JLR. It's a company that keeps on delivering for Tata Motors when everything else does not work. But remember, Tata Motors, right now, its passenger vehicle business is also working.
On the standalone side.
On the standalone side. So, when you talk about the lows that we saw in March 2020, that was sub 100 rupees. From then, the passenger vehicle sales have come in, and Tata Motors found itself in a sweet spot. the demand, so when the pandemic was coming off, people wanted cars, people wanted bigger cars because of the cash that had accumulated. So the car which actually did not sell a lot previously, the Nexon, became the money spinner for them in India.
But I just want to come in on this because I've looked at Tata Motors numbers over the years, and you're talking about 2/3 of the revenue that comes from Jaguar Land Rover. At one point, all of the profit coming from Jaguar Land Rover, and we've come back to a quarter in the third quarter, Tushar, where you had 16+% of EBITDA margins for Jaguar Land Rover. Not seen something like that for the longest time. And Chery Automotive, its joint venture in China, also firing on all cylinders.
So China sales are also up, where also at a time when we have seen EV sales actually declining both in China as well as in US and Europe markets. And that actually, in a way, has worked in favor of JLR because as of now, it does not have an electric car. It has the I-Pace, but it does not sell so much. Their more mainstream Range Rover electric vehicle will come in the next 1 year. So JLR gives that profitability angle to Tata Motors, which actually helps the group company at
just a very quick
one. But what's the crux? What's the crux? Who
wins?
Yeah, who wins?
I'm going to quickly slip this in and we can continue with who's the crux. As of yesterday, Tata Group, guys, so when we talk about Tata Tech, we're talking about Tata Motors today, has crossed 30 lakh crores of market cap. So this is the first Indian conglomerate to make that historic level. And today's conversation clearly revolves around two Tata Group companies.
So, but then the bet is whether or not you would bet on a Jaguar Land Rover, which has a global play, or a Maruti Suzuki, which is moving away from the entry-level segment into SUVs.
Sorry, Tushar.
So, you never discount Maruti.
And Shashank did tell us that he would own 15% of the EV segment by F530.
So 18 months ago, Maruti was a big player in the SUV space. It launches 3 products, is the market leader 18 months later. But we also have to remember that historically, a segment leader in India's auto space has never abdicated the throne. Maruti is a champion for small cars. It will remain the champion for small cars. In the two-wheeler space, Hero MotoCorp makes the largest number of small two-wheelers. It keeps on making it with 40% market share. In the premium segment, Royal Enfield is in a Goldilocks zone. Nothing can beat it when it comes to 350cc. Bajaj may launch a Triumph. Hero may tie up with Harley. It does not. So nothing has changed on that fact. So now in EVs, Tata Motors has picked up that advantage with 75% stake. So when we look at the decade going ahead, if Tata Motors builds on that, Maruti will have to play catch up all the time. But if anybody who can beat
Tata Motors.
But if anybody who can beat Tata Motors, it's Maruti because it can come back whenever it wants to.
But just 2 points here. One, the passion is showing. 2, viewers need not choose between the two. They can choose both, part 1. But just the 10 more seconds, the narrative around Tata Motors from the time that it went up from those lows,
double-digit numbers,
all the way till now. It's the best performing auto stock in 2023. Arguably, it could be the best performing stock as of now in FY24, 2024 as well. The narrative is so strong around JLR, free cash flow, guidance, etc. It's difficult to beat that narrative for now, at least.
Okay, so you've had the heavyweight fight out of the way. We've moved to the welterweight fight. Unfortunately, we have less time for it, so let's quickly go through it. We've got Niraj versus Tushar on this one.
No, it's Tushar all the way. I'm just adding the sprinklers.
It's a conversation. It's also, remember one thing, Tata Technologies is actually a Tata Motors group firm. It's a company that Tata Motors spun off and listed to a blockbuster listing in December, I think in November, end of November, to I think the biggest reception for any Indian IPO till date. We are talking about Tata Technologies as well as KPIT because KPIT, as you mentioned, has gone up 5% yesterday. But we should not forget Tata Technologies at this point of time because it's their first earnings since listing. It was the first Tata Group company to list in the last 20 years or so. So why do we need to have this conversation? Is because of the ER&D space that we have right now. So it's a space that is going to grow at a CAGR of about 10% over the next 5 years to $2.7 trillion in the global space. And global automakers are likely to spend about $1.2 trillion on case mobility, that is connected, automation, shared mobility, and electric mobility. And KPIT, homegrown, Tata Technologies, homegrown, are actually absolutely well placed to make the most of this interest that is going to come. They are the pure play ER&D companies. We have to also remember that Tata Technologies has clients apart from Tata Motors and JLR from within the company. Air India, it's one of the most critical suppliers to Airbus. Also counts a very small part, does some amount of business for Tesla as well. Tata Technologies. KPIT has well-entrenched partners or clients servicing about 7 of the top 10 OEMs in the country. But what splits them is you cannot have a more close comparison between KPIT and Tata Technologies as far as the numbers are concerned.
Q3 numbers. Let me run through this very quickly. About 1,250 crore rupees for Tata, KPIT on top line, 1,290 crore for Tata Technologies. EBIT margin stood at 16.59% for KPIT, 16.23% for Tata Technologies. And the bottom line is 156 crore rupees or thereabouts for KPIT and 170 crore for Tata Technologies. Comparable to say the least, 37% guidance of growth for top line for KPIT.
That's the part where KPIT trumps Tata Technologies at this point of time. They guided for 37, they revised higher at a time when the wider IT ecosystem has declined. We are looking at ending the year at about 5 to 6%. TCS ending the year at 5 to 6%. A KPIT is saying we'll beat 37% and grow at almost 40% in this particular year. So you see the opportunity that happens. Tata Technologies does not give a guidance, but going by the numbers that we saw in FY23, that's 24% year-on-year growth, anywhere in excess of that. Again, you're still beating that. So we have to see all of this in the context of what ER&D means to the IT services space.
What about valuations for both?
I was coming to that.
Yeah.
I was coming to that because, and this is also data Tushar has put, but that's why, and that's the reason I'm saying it. 59.44 FY25 price to earnings for KPIT and 55.94. So it's comparable. That's the whole point. And right here as well, and more than anything else, the point that you will make, why do you want to choose one of the two? It's possible to...
Or why not shun both, simply because the valuations are just egregiously
But do you
expensive.
have to shun both?
You don't have to.
You have to.
No, I'm just posing the question.
It's possible. Part of that conversation that's around ER&D.
And the last time we had this was when Tata Tech was listing. Remember how KPIT was getting trashed just because of the listing?
Exactly. Great point to make.
And it's at life highs yesterday.
I mean, managed to recover
but very expensive,
all that
you
loss.
have to admit.
All right. So, but then the jury, of course, ultimately is the viewer and the investor at the end of the day. So you got to tell us which of the two pairs you would choose, or would you bet on all four? Let us know in the comment section, and do stay tuned. Lots more coming up after this break.
Welcome back. You're looking set for a positive start as far as the implied open is concerned. But what is the strategy for the day on the F&O side of things? Agam is joining us on Bank Nifty day, Bank Nifty expiry day, Agam, and the Bank Nifty has been the weakest of the lot.
Absolutely, and that's what we've seen yesterday as well, Tamanna. Even though the Nifty advanced, the Bank Nifty came off in yesterday's job trade. The Nifty futures did see about a 2% increase in open interest towards longs. The Bank Nifty, on the other hand, which did come off by about 3/10 of a percentage point, did see about 8% added towards open interest in terms of fresh shorts. Now, as far as the option market is concerned, at the moment, we are seeing a lot of traction on the higher end, even as the range moves higher, because that's explained by the substantial writing in puts that we've seen around 21,700, 21,800. Where does that bring the range to? As far as the Nifty range is concerned, now this has moved higher, with the base moving higher from 21,500 to 21,700. In fact, that's the 21,700 put is the one with the maximum open interest. On the higher end, well, there is not as much resistance around 22,000 as much as there is now at around 22,500, where the calls have most amount of OI. Finally, coming down to the Bank Nifty and taking a look there, today is the weekly options expiry. It's at the 46,000 mark, where we've seen a lot more activity, and I reckon that 46,000 will continue to be a pivot in today's day of trade, even as we open up to the weekly Bank Nifty options expiry.
Thank you for that, Agam. Meanwhile, Ashok Leyland's profit has surged 61% in the third quarter. We spoke earlier to Shenu Agarwal, MD and CEO, and Gopal Mahadevan, full-time director and CEO of the company, and began by asking about the expectations with the calendar year and if third quarter met the guidance. Listen in.
When the year started, we had aimed at achieving a double-digit EBITDA for the whole year. But we could achieve 10% EBITDA in the very first quarter of the year. Then in second quarter, we went beyond 11%. And in third quarter, we are already at 12 now. Quarter four is normally the strongest quarter for the stevia industry in terms of top line and volumes. And therefore, we will have additionally some economies of scale there. Plus, our efforts on pricing, our efforts on cost reduction will also play out a little bit better going forward. So I think we will only continue. We will only improve on the trajectory of the first three quarters here. We are very happy also because, you know, in the investors meet last year, we said that we want to move to mid-teen EBITDA levels in the medium term, which is like 3-4 years out. But already having achieved 12% and hoping for even a better performance in quarter four, we think we are moving very well on our plans.
So multiple factors that people in the research industry as well as us houses kind of think about. Maybe an industry upcycle, maybe better realizations, in your case, even higher defense revenues, all of these contributing. Heady mix, and you reckon that this could last for the foreseeable future?
See, what gives us confidence is also, it's not just the MHCV story which is playing out well for us in terms of margins or even in terms of penetration. But also all our other businesses are doing fantastically well, and I think they will continue to do well. And I'll give you some examples. So for example, LCV business, actually the market is slightly down, but we are doing well above the market growth. And therefore we have been able to increase our market share in the LCV business. Now we used to be number 3 player in the 2 to 3.5 ton segment, but we have now jumped to number 2, right? So that is a great progress. On the defense side, we have been able to more than triple our top line this year as compared to the last year. On the parts business, which is very high margin business, last year we had mammoth growth in our parts business, and we were afraid that whether we will be able to top it up this year, but very happy that more than 30% growth we have been able to clock in the parts business as well. And finally, power solution business, which is also a good margin business and strategic to us as well. We have a record year this year so far, and I think by end of the year we'll create a all-time high record in that business also.
Mr. Mahadevan, sweet spot to be in such a case. You've seen many cycles like these. I mean, does it look very strong? Because, and again, your role within that, right? Because MHCV cycle looks strong, but unless I'm wrong, and if at the cost of sounding like I'm nitpicking, have the shares come off a little bit, and is this cyclical in nature? How do you play a part in that cycle as well?
You see, while to look at the market share is very, very important, and we have a very clear focus on that. We've shared with investors that we would want to grow faster than the market, and that's our strategy. But to measure it quarter on quarter may not be the best thing to do, because there are factors in a quarter where you may. For example, there could be geographical factors, for instance, right? If the South grows more, our share could grow more. If the South grows a little less, you would technically see that the maths don't work out. And the larger trajectory is, are we doing all the right things to get post a growth which is faster than the market? And that's exactly what we're doing. We are enhancing our presence even further in the North. We want to ensure that, we have a much larger footprint in the North and the East, and we are rolling out, dealerships and service centers right across. And I believe that this should start paying off dividends in the short to medium term. The second thing is industry-leading products. So it's very important. We have been raising the bar on the industry for quite some time now, maybe even the past 50 years. And we will continue to do that as a strategy. And we have done that in EVs as well. And we will continue to do that because I think that's another great way to actually get the customers inside. The third bit is, on the pricing front. I think while we will do all of this, we would want to ensure that, we keep adjusting the prices, increasing them, improving the margins, so that on a whole, on an overall basis, not only does the company grow, but the profitability of the company is also enhanced. And there comes in what we shared in the earlier part of the year, that our aspiration is to grow faster than the market and at the same time also try and reach for that mid-teen EBITDA.
All right, that was Ashok Leyland on their quarter three. The other big story, of course, that we've been tracking right here on NDTV profit, and the stock has been showing these wild movements over the last couple of sessions, is Paytm. The latest in the saga, Vijay Shekhar Sharma has met with the finance minister yesterday, but was told to deal directly with the RBI. Pragati Oberoi has got the inside story on what went down on that meeting. Pragati, tell us more.
Yes, so Vijay Shekhar Sharma, according to our sources, met the finance minister on Tuesday evening around 5:30, and primarily he met the finance minister seeking help with regards to what has recently happened with Paytm Payments Bank, and specifically referring to the RBI clampdown that happened on 31st Jan. From what we know from our sources is that the finance minister, Nirmala Sitharaman, showed Vijay Shekhar Sharma the door and said that it is best for the company and him to deal with the regulator, that is the RBI, directly, and there will be no involvement of the finance ministry in this entire thing. Now, we also know that Vijay Shekhar Sharma even spoke about the fact the larger repercussions or the impact of RBI's clampdown on Paytm Payments Bank can have on the fintech industry, and hence he was trying to seek support and help from the ministry in this regard. However, like we already mentioned, that the finance minister said that it is best for them to deal directly with the RBI, and nothing more actually came out of this meeting. That's exactly what we know from our sources. If we have more, we will bring back to you.
All right, so very interesting developments considering Vijay Shekhar Sharma has met with RBI governor day before yesterday. Yesterday he's met with finance minister. We also reported that they've been reaching out to banks that please onboard our customers. They're not very keen till it's all sorted out. What this also tells us that the government is trying to send a message in light of the startup founders note we reported on, guys, that we will take strict action if there's a regulatory overstep, but we're not targeting the industry, which is why they've gone ahead and met. But I'm not sure how much relief Vijay Shekhar Sharma is going to get from the finance ministry.
Yeah, also for the finance ministry, I mean, it seems that the finance ministry is saying that the ball, and as it should be maybe, is in the RBI's court. So go and deal when it comes to a matter like this with the Reserve Bank of India. There are other matters that the finance ministry deals with, and that is why. I mean, this is my perception. I'm not saying that is what has been reported or anything, but it just seems to be the case that it is an RBI thing, and RBI directive, RBI what mission, and that is what will happen. Apparently, the RBI is also going to issue a statement with regards to that. I think Vivek Joshi was quoted as saying that they will release a statement on Paytm shortly too.
Well, we'll have to wait and watch for that. But also the messaging is very clear that please don't try to pitch it as a finance ministry versus RBI of scenario. We're on the same page. RBI is doing what it needs to. So that's going to be an important stock to watch. Very interesting recovery yesterday. Smart recovery for Paytm, considering it was down about 43%. Nowhere close to where the hit came, but definitely one to watch out for on its various angles that we've been covering.
Indeed, that of course will be the stock as well that you will track in today's day of trade. So we'll watch out for Paytm. Quick check on the implied Nifty. The markets are expected to see a gap up in trade. Global cues are largely positive. Earnings reaction is what we are tracking. Bang Nifty, I think that's going to be one to see whether it's going to finally play catch up. It hasn't done so, remember, but we were expecting it to play catch up if the Nifty had to make the next leg of move. This time around, doing it without the participation of Bang Nifty. So it's commendable of everything that we're seeing on the street.
Most certainly. And auto is coming to the fore, and which is what I just thought I'll just quickly snip in 30 seconds of what Ashok Leyland had to say. Amongst everything else notwithstanding, because we were talking about Tata Motors and the CV business out there is also doing well. In fact, as we said yesterday, Tata Motors MHCV market share has actually gone up. Ashok Leyland seemed to believe that, yes, there is some market share issues, but they are not focused on it so much. What they are focused on is building a profitable outlook ahead, the EV business. And to be fair, there were estimates that they would generate free cash flow of an average annual free cash flow of 2,800 crores from now until FY26, which the management confirmed. So imagine a near zero debt company generating nearly 3,000 crores of free cash flow, the amount that they would have to invest in the EV business. That is something to watch out for.
Talking about auto ancillary, those JK Tyre numbers as well were amazing to say the least. So you will have not just auto. We've talked about how auto has been doing exceptionally well, but it's not auto in isolation. Auto ancillary names have also been actually performing pretty well. You've seen those in the form of numbers. JK Tyres also saw a profit jump of over threefold to come to 227 crores. So all in all, I think auto will be in focus. You have your banks that may play catch up. FMCG, that's a conversation we will have. In fact, Britannia reported earnings, and there is some news that's on your screen.
My eye has been glued on the flashes at the bottom of your screen because remember that in the pipeline for several years, I think close to a decade, guys, has been this idea of extended trading hours, and the proposal was mooted late last year that you will have extended at least index F&O trading post-market hours. The concerns were whether the ecosystem is in place for this. And now what we're learning is that the Association of National Exchange Members of India, that's ANMI, and the Brokers Association, which is the Brokers Industry Standards Forum, have given their nod for it. Remember, at the end of the day, these are the two components or the stakeholders that matter, because if you are going to have extended trading hours, you need these people to come in and say that they're okay with it. In fact, I have Sajid now.
No, but just, okay, while Sajid gets ready, just one thing out here is that what is being done right now is not a full-fledged market extension, but
index.
Just futures.
F&O index.
Yeah, and hence it is plausible that it is an easier pill to digest for brokers who've been talking about the fact that if it extends for more than the 12-hour shift, then the increase in cost for them, the stress on the personnel who have to stay till late for mapping the books, etc., goes up. Since this is not market-wide but the index, I think it is probably a more plausible thing which has been.
But if you remember, we had done this conversation late Diwali, and we had done a poll as well on the channel and the website at that time. Many were saying that is it going to be worth the cost? So it's not going to be that easy to actually put in.
Sajid, and you should come in on this one because you've got more on this. But let's be honest, in the last 5 years, the NSE has emerged as the world's largest derivative exchange in 2023 by number of contracts. In addition, we've also ranked the third in the world in the equity segment by number of trades. So how much more is what I want to know?
No, so that market share has been moving around, because in the last 6 to 12 months we've seen BSE's market share going up to 10 to 14% in the index, because BSE's two products, Bankex and Sensex futures, is what is driving volume, and so they have a good 10 to 14% of market share which is there. But the news here is that it seems the board of ANMI has agreed to extend trading for index products, which could be index futures at this point in time. The BSE Brokers Forum will also be doing the same thing, and the Commodity Participants Association of India, which is CPAI, will agree to it, because it's not they are anyways they have an extended trading for commodity futures, which is there in the market. But it's not the entire thing, as you were mentioning, Niraj. The recommendations have to go from the Brokers Standards Forum. This is a new forum which has been created by SEBI, because there was differences between all the brokers forum. SEBI was not taking an action, and I think if we are not wrong, last week the SEBI chairperson mentioned very clearly that the brokers themselves are a divided house as far as extended trading is concerned. So now the consensus has been built between the brokers. A common letter signed by all three associations has to go to SEBI. It will go to the SEBI's internal committee, where they will deliberate on it. Based on that, they will come out with a discussion paper for feedback from the public, and then once the feedback is out, it will go back to SEBI's board for approval.
So the brokers are on board? The brokers
are on board.
But brokers are not the only people who are doing, right?
But Sajid, the limited point is, this is what you said will happen is procedural. That would happen in any fashion.
Yes.
The change is that
this is a new process.
But the development that has happened is that the brokers are now on board for this extension, but it is only for index, right?
It's only for index products as of now. So the point is that, as you said, compliance is going, Samina was talking about compliance, whether it's an index product or a stock product. The compliance is the same. People have to sit and do the compliance, right? If you extend the, if you extend the trading to beyond 3:30, or you say that from 5 to 12 we are going to do it, something what we are seeing in Gift City, which is happening for the Gift Nifty, which is there. So those things will come into play. The compliance has to come in, and if that's a way to go.
In the same vein, I mean, you spoke to brokers. Okay.
It will be in the same way, right? It's if they it's not just to 5 for 5. Maybe starting off they will say till 5, but then they'll say the Gift Nifty is anyways trading.
No, and I think, Sajid, also what you want to keep in mind, that the brokers that are pushing for this are discount brokers, are high-frequency trading brokers. And also by extending trading hours, maybe the push could be to bring more institutional foreign investors into the trading business because of the hours of trade. US opens up later in the evening. I don't know. Is that some form of thinking going there? Or is this what investors and traders actually want?
This has happened after... SGX Nifty is, or rather Gift Nifty is now more relevant than SGX Nifty. Yes. So the timing is interesting.
Is not there.
Precisely. So that's what I'm saying. So since the volume is now shifted in-house,
and there'll be now an overlap with global, significant global time zones.
I mean, you're right. The idea always was to give Indian investors also an opportunity to respond to global action and not wait till the next morning.
It's a little bit like what currency markets do as well.
The extending it to 5 o'clock does not
so that
reaction to global.
I mean, all I know is that
it's only till 5.
If the regulator asks me, I'm saying no.
Right now it's only till 5, is it?
It could be till 5, because till 5 SEBI has anyways allowed exchanges to.
But the initial proposal, if I remember correctly, was till for later hours as well.
No, till 5.
You're not going to have it. It was till 5 only.
Also, any chances?
Because only the NSE was pushing for it. BSE was not having much volume, so now the BSE is also having volume, so it's...
Very quickly, just like you have in Tokyo and Hong Kong, you have a lunch hour break. Is that something that's being discussed, or that's not what we are gunning for?
You still have to work in lunch hour.
You still have to work in lunch hour. Okay. It was about respite and a break for traders, guys, not for us.
But thanks for bringing this up, Sajid. Somebody might have good insight on this too. Very quickly, let's get in Mayuresh Joshi, because he joins in. He's been a part of this outfit for a long time. Aamar Dev Singh, head advisory of Angel One, also joined in. Guys, it will impact your lives for sure. But very quickly, before we move to markets, Mayuresh, a quick thought here on this index products getting an extension possibly. At least Brokers Union is now on board.
Yeah, I think that was the debate, right, Niraj? And I think a large part of all the colleagues that I've got probably are not open to the idea. But if the regulator wants it, I think the brokers will have to abide by it. It increases cost at the broker end also. But till what extent will these extended hours go? I think at some point you would have to give precedence of health over wealth. So I think I'm in the camp of existing hours being as it is.
So Mayuresh is in the camp of existing hours being as it is. I have to ask Aamar, they were saying very quickly, what camp are you on? And once this starts, and if this starts, I'm sure even those who don't want to look at the markets post 3:30 will be forced to one way or the other.
Yeah, here I would like to add is that we need to realize that, we are living in a global economy wherein the US markets and other markets definitely have an impact on our markets as well as all markets. And if you look at the commodities markets, which are open till late night because of the US movement. So I think there's a lot of talks and deliberations around this. So let's see how it works out.
Right.
Okay. Gentlemen, let's talk about the markets. Aamar, to you first, very quickly. Thought on the Nifty and the Bank Nifty. Nifty in particular, a trending day yesterday. We'll probably have a gap up start. What do you do post that?
No, I would say that we've been consistently holding the view that the overall trend, intermediate, long-term trend, that continues to remain extremely strong. So any pullback is a buying opportunity, no doubt about it. And also we've seen that be it the likes of TCS, Infosys, Reliance, all of them have really leave apart HDFC Bank. Despite HDFC Bank having the highest weightage not performing, we've seen significant up move from these other heavyweights. So that tells me that there is definitely support for Nifty. However, on the upside, I would say the immediate zone of resistance would be around 22,150, 20,200 levels.
Aamar, sorry, I'll have to cut you in and we'll come to your stock recommendations in just a moment. But on this news that we just put out, Vijay Mehta, president of ANMI, joins us right now on the show. Mr. Mehta, good having you. Thanks for joining in. So what has been agreed upon from the brokers forum? Is it an extension up till 5 p.m. or later? Is it an extension only for a specific set of index products or the whole bouquet? Can you fill us in?
Yeah, you see, we got a query from Industry Standard Forum, which has been recently formed by SEBI. On this particular point, whether we are agreeable in principle, and we had a board meeting, the NME had a board meeting on 2nd February, and it was unanimously decided in the board meeting that in principle we are agreeable for the extension of trading hours, and to start with, we are agreeable to start trading in index derivatives, and subject to the sorting out of operational problems which are expressed by the members, which they might face. So the approval is in principle subject to the sorting out of the operational matters.
But is it till? So I heard you say it's. Did you say that it's till 5 p.m. or a particular time period, Mr. Mehta?
Well, NLC has proposed from 6 to 9 p.m.
Okay.
We have not said anything about the timing. We will be once the SEBI approval is received, and when the discussions take place about the sorting out of the operational matters, at that time, this point will also be taken up.
Mr. Mehta, very good morning. So 6 to 9 p.m. is the proposal. You're saying subject to sorting out operational matters. Can you give us a little detail on what exactly that is? Does this pertain to staffing, to requirement for compliances, increased costs? Just give us some detail there, please.
Well, these 3 points are already there, but what I meant from the operational side is how will we adjust the margins? How will the settlement take place for the trading which has been done during those hours? And when the market opens the next day, then which rate would be taken up? And suppose there is a very important development which takes place between the trading hours, between the extended trading hours, which affects the market strongly, then in that case, how will we adjust the differences of those who have not traded? So there are many issues which are going to be sorted out, and we will look into it once the approval from SEBI is given, or when there is a discussion in the ISF about all these operational matters, then there will be a consensus which would be reaching, because even NSE representatives are there in the ISS meeting.
Okay, I think we need to slip into a break. Mr. Mehta, just stay on. We need to go into a very quick break and come back and continue this conversation with you. Please stay back.
Right, we're going to be seeing a pre-open in just about 30 seconds or odd. A very news-heavy morning, and we've just been speaking with Vijay Mehta, president of ANMI, on the agreement now that associations and brokers have on extending trading hours. Just one last question from you, Mr. Mehta, and thank you for staying through the break. By when, in your view, will this now be a practical reality? Because we've had consultations for years on extended trading hours. Do you think it's finally going to happen, and by when?
Well, I think our job was to consult the brokers and consult all our members and then communicate our decision. I don't think it is in our area of authority to ultimately take the final call, which will be taken by SEBI. And then only after it will become a reality.
Okay. Mr. Mehta, much appreciate you giving us this clarity. Thanks for taking the time out. Well, sketchy timelines, if you will, but for now, it seems that while the NSE had given the mandate till 5 p.m., what the proposal is for having a fresh session between 6 to 9 p.m. So maybe the markets end at 3:30 and then have an index futures and an index options piece between 6 to 9 p.m. if it reaches the stage of approval. Don't know the timelines. So that's the long and short of this right now. Before we continue our conversation with our experts, quickly hear from JK Tyres as well. Samina mentioned that the numbers looked okay. Hear out what the management had to say as it aims to grow its installed capacity over a period of time. Tushar Singh spoke to Anuj Kathuria.
Overall, our capacity in terms of millions of tires, it is around 34 million tires annually. And with this, including the expansion programs, we should see this going up considerably. I do not have the numbers handy as of now, but there will be an increase of 10 to 12% in the overall capacity based on the capex announcements that we have made, and therefore we expect that this is something which, considering that the tire industry in India is expected to grow at a CAGR of 6 to 8% in the next 4 to 5 years, this will play out very well.
Well, that was JK Tyres. Will be a stock you want to track this morning. Mayuresh, let's start with earnings, and I'll talk to you about HDFC Bank in a minute because it is indicating to a 2.5% gap up. I'm not sure what's happening there. That Aamar might be able to help. But Britannia, what did you make of those numbers? And we also have Nestle later on in the day. How did you view them?
So I think, Samina, for Britannia, I think the volume push was largely driven by the price cuts that the management had taken. And therefore, I think in a weak environment where price cuts were mandated to probably push volumes through, I think volumes are a tad bit better than what the markets really expected. But I think the pressure points are still getting indicated in terms of their margin performance as for its peers. So the general trend or the underlying trend for the sector as a whole largely still is that demand still remains weak, specifically on the rural side. Input costs have largely stabilized. So the next couple of quarters, input costs should largely be in favor of FMCG companies. But volumes will take time to recover. So to that extent, my own sense is that Britannia, Nestle, or a whole host of these FMCG companies might just have a consolidated range-bound trade because valuations are definitely skewed on the higher side and stacked up against them.
Expected to open about 22,000. Now, this is going to turn out to be quite an exciting morning. Aamar, a quick one on Britannia on the charts. How does this one look? And while you're at it, you can also tell me about Nestle, if you've got a view ahead of its earnings.
Yeah, I would say that looking at Britannia seems to be in for consolidation because the stock is unable to breach its 53-5400 zone. So that's a zone of resistance for the stock. And also we are seeing some sort of the short-term trend definitely remains, I would say, more towards consolidation. Long-term trend is positive, but not very strong. So I would say it could be in for consolidation, but yes, any correction can be used as a buying opportunity. The stock has got very strong support coming around the 4,500, 4,600 level. So correcting towards 4,800 levels, that's a level to watch out for. If the stock sustains, then we could witness a pullback. But it's more or less a range play for Britannia. Talking about the other stock which you mentioned, Nestle India. So if I look at Nestle, that also has a similar pattern, but in that sense, Britannia is stronger on the charts as compared to Nestle. So we are seeing some sort of consolidation here in Nestle. Again, it's approaching very crucial support zone of around 2,400 levels. If that level is taken out, then we could witness some sharp correction. Otherwise, the stock could be in for consolidation between 2,400 and 2,600. That's the zone that the stock could consolidate in.
Aamar, we will talk to you about stock-specific earnings, but very quickly a word on Bank Nifty. It was conspicuous by its absence yesterday. Even pre-open is not indicating too much just yet, barring HDFC Bank, which should be getting a good leg up. Would you go long on Bank Nifty on anticipation of a catch-up in the Feb series?
Yeah, so if I look at Bank Nifty is more or less trying to find a bottom because it hit almost 44,000 levels, currently around 45,700 odd levels. If you ask me, it has got resistance around the 46,900, 47,000 level. That's a range to watch out for. So it's a range, but if you ask me, it's more or less consolidating. Till the time we don't see HDFC Bank significant, because that has almost more than 30% weightage in Bank Nifty. So that has to really perform well. Otherwise, it's more or less consolidation in Bank Nifty.
Well, lots of earnings, like we've said, that the markets will react to. We've got two that we want to watch out from: Navin Fluorine on the upside and GSFC, which is disappointing the street. Mika standing by with more of that. Mika, how are those numbers looking? GSFC was a huge disappointment, right?
Yes, it was. The numbers missed estimates on all counts. Revenues were down 42%. Margin stood at 5.35% versus 9.93% previously, and net profit was also down 71.21%. The key highlights were the fertilizer sales and the profit impact that led to the downwards revision in the subsidy rates, and the industrial products were also impacted on the back of lower sales realizations. However, the outlook that the company has given on fertilizers, they do expect an increase in the MRP in the short term and aim for a 10% growth in their fertilizer sales volumes in FY24. And then we did have Navin Fluorine, where the revenue numbers, which was down 10.96%, they did miss estimates. However, the profit, which was also down 26.78%, but not to the extent of the estimates as it did beat estimates. The revenues were mainly impacted by the slower ramp up in the HFO plant and the pricing pressure that came in, and there were also deferrals of campaigns and inventory destocking. However, the postponement of the sales for key molecules in the CMDO business, they have postponed it to FY25. So FY25 and FY26 could be strong for the CDMO business.
Okay, well, watch out for these. Navin Fluorine is corrected so much that maybe not seeing as much of an adverse reaction, but GSFC certainly down and out in the session today. Mayuresh, any thoughts on these results that you've seen?
On expected lines, Niraj, good morning to you as well. So I think the inventory destocking, which clearly impacted most of these players over the last few quarters, is still getting played out. And what this has obviously done is, surrounded by a weak environment as far as demand is concerned, the prices have got pulled down as well across the chemical chain, whether it's commoditized or niche chemicals as well. Now, a large part of the expectation of the market, Niraj, is that the first half of the next financial year is when demand is expected to come back. There will be restocking that happens at some point of time during that time periodicity as well. And therefore, prices should start showing an element of increase. Along with backward integration in PLI, I think the first half should be a base effect where earnings start showing up nicely for most companies, specifically the niche specialty players. So I think the next couple of quarters might still be a little bit of subdued earnings for these companies, but they should come back very, very strongly in the second half of the next financial year.
Absolutely. Aamar, I'm coming to you and I'm bunching up a few questions. So Navin Fluorine, GSFC, and I also want to know your picks.
Yeah, so looking at, first of all, GSFC. GSFC is now approaching a very crucial support zone. So it's corrected sharply from almost 320 levels to currently trade around 268 or so. So it's around very crucial support zone. This could be a buying opportunity because around 250, 260, that's a very strong support zone. So we'll have to wait for some consolidation. If the stock consolidates, doesn't reach the 250 odd levels, then this could be a pullback towards the 300 odd level. Talking about the other stock which you mentioned, Navin Fluorine. So if I look at this, this stock has been on a downtrend because this stock has definitely not performed from almost 5,000 levels, currently around 3,200 levels. On the long-term charts, the intermediate-term trend, that all continues to remain negative. So I would say it is approaching a crucial support zone if I go back in time, but I wouldn't recommend getting into this stock. And as far as the picks are concerned, I would say the first one is LIC. I've been talking about it for quite some time. So LIC has been on an uptrend. I would say it's been on a tear. The way the stock has rallied and taken out the consolidation zone somewhere around 800 levels. Currently, it's around 1,030 odd levels. So what happens is that whenever a stock breaches its all-time high and on significant volumes, because if we go back and for the last 2-3 weeks of trading session, we see significant higher volumes and also delivery quantity happening. So that tells me that there is a strong momentum in the stock, and also some of the news flows have been positive for LIC. So this is one stock one can definitely look at. Any pullback towards 1,000 odd levels can be a buying opportunity with a target of 1,095 on the upside and a stop loss of 935. And the second stock to look at is from the energy space, that is Bharat Petroleum. This is again one stock has after a long time reached its major zone of resistance, trading at all-time highs, very strong technically across timeframes. The momentum is very strong. So this is one stock one can look at buying. Any dip towards 600, 605 odd levels can be a buying opportunity. Upside target is around 675 and the stop loss is 553 on the downside.
Okay. Just marking, since the pre-open rates have settled down, some results. Raj wonder if that stock is reacting to numbers because they were very strong. Zaggle Prepaid and Dollar were the other ones. Raj about 2% higher. Zaggle Prepaid 100% uptick in PAT, 11% higher the stock. And Dollar Industries, very strong numbers, as did EIH come out with good numbers. So just mark those as well. Dollar flattish. Wonder what EIH has done and wonder what Lemon Tree has done, because they have an opposing ends of the performance. EIH is up 11% too. And very quickly, Lemon Tree, which had a slightly forgetful quarter, if you will, down about 1%. So two stocks which have had an 11% uptick. Mayuresh, quick thoughts on either of these? Zaggle Prepaid, a new listing, or EIH, which has had a very strong quarter?
No, so I'll have to look into the numbers of Zaggle. Too many numbers could not look into that, Niraj. But EIH obviously reacting in terms of good set of numbers, and obviously the tailwinds that are supporting the entire industry. Even going forward, expectations in terms of the average revenue is expected to be on the higher side. The asset-light model that most of the companies are following up, again, is going to be earnings accretive as we move ahead. And as we move ahead into the next few quarters as well, I think the large part of expectation is that earnings should still hold up on a higher base. Just to mark Lemon Tree as well, Niraj, since we are on the subject of hotels, I think the new listings or the new properties which have come through, those have clearly impacted the numbers, both in terms of occupancies as well as margins. I think the street will take cognizance of that.
Okay. Go across to Harsh, who's been waiting by with some details of some other stocks to focus on. Harsh, good morning.
Good morning, Niraj. You're looking at a UPL which is in focus, downgrade with regard to its rating. Moody's has downgraded to a Ba1. Quick set of numbers that I want to highlight. 35,000 odd crore of debt, which is more than 1:1 in terms of debt to equity. Second off, with regard to just the cash balance itself, that's halved over the 9-month period. Debt has gone up, and when I'm looking at interest cost, it's gone up by 33% over the last year or so. So keep an eye out on UPL on a weak set of numbers. Stock has been down 11% over the last 5 days as well. Quickly moving on, Max Life. The IRDAI has given its nod for a 1,612 crore capital infusion, improves solvency, of course, but outside of that, it allows Axis to increase its holding from Axis Group as a whole, to increase its holding from the current 12% to 19%. A little bit of an overhang has been there with regard to this particular acquisition of Max Life. Max Financial will be in focus on the back of that. Stock was up 5% in trade yesterday, is up 2% in pre-open today as well. Canara Bank stock split announced today morning. They're considering a stock split, I beg your pardon, on the 26th of February. Face value is currently at 10 rupees a share. You're looking at a PAT for 9 months, FY24 being at 11,000 crore, and the current price to book has just breached 1 time.
Okay, 1 times price to book. Some PSU banks still available there, so well, watch out for these as well to monitor. In fact, just about 50 seconds left. Aamar, I know you've given us your ideas, including LIC, but if I were to bet on one short-term trading call, quick 20-second call, which one would that be?
I would say that one can look at Steel Authority of India. This is one stock which is very strong technically on the charts. It is close to breaking its all-time high, so this is one stock one can definitely look at because it's very strong and there is bullish momentum in this particular stock.
Okay, Steel Authority of India from Amar Dev Singh, and keep in mind, I mean, aside of the other calls that he's given, remember SAIL had a very strong morning or very strong day yesterday, and metals in general have had a good move, so that's to be kept in mind. But here's how we're starting off this Wednesday morning. In the green, I have no doubts. The question is how much? Okay, it makes me wait, but 0.5% higher for the Nifty, about 0.4% for the Sensex as well. Wonder if the banks are doing an encore or no. Oh yes, Nifty banked to about 0.5%. So not a bad day because both the indices are starting off in tandem, which tells me maybe IT is not ridiculously strong this morning. Nifty mid cap 0.75%, small caps about 0.8%. So not a bad start really. Expected lines maybe. Bring up the heat map and show you what's happening in the large caps. I'm sure a lot of action. Britannia is up 2.5%. There is strength in banks. Axis Bank is up 1.5%. It was amongst the top losers yesterday. SBI is about 1.3% higher, so not bad going. Yesterday's big winner HDFC Life continues its momentum, so up about 1.8% after the 5% uptick in trade yesterday. So that's pretty good. Metals continue the momentum. So the metal index, Coal India, Hindalco, both of them are right up in the top 10 winners list. Adani Ports and Enterprises are also up about 0.75%. So watch out for those as well. Life insurance, the Adani twins, couple of banking names, Britannia on the gainers list. Lot of gainers, very little losers. Power Grid, 3 days on a trot now, or rather 2 days on a trot now, is seeing some bit of a pullback. And IT today is sulking. Yes, that was a big day yesterday, but that happened today. IT is taking a bit of a backseat, maybe also because banks are so high that people are right now focusing on banks for a trade. Maybe IT bounces back in the second half, though I don't know why, but banks clearly holding the attention, Tamanna, this morning.
Absolutely, and Britannia like a champ despite what is being expected to be a muted quarter and being seen as a muted quarter, doing very well. You know, the focus this morning on the consumer space as well, and we're going to have a great conversation on that on a bit, but let me take it forward on that note with Nykaa. FSN's numbers widely got a bit of a thumbs up. Their beauty beauty product business is doing well in any case, but even their fashion business is expected to shore up. So we'll start with Nykaa first up and see what's happening there. A buy rating coming in from Jefferies, a buy rating coming in from HSBC as well. So all of those stocks, we can show it on the wall. If you're not managing to pull up the ARs this morning, that's perfectly fine. Elara Capital also with a buy rating for Nykaa. There we go. The stock up about 5% up. And all of them looking at the fact that you are going to expect a good turnaround in the next few years. In fact, HSBC says that revenues will double every 2 to 3 years over the next 5 years. So you're seeing Nykaa with a great start. Navin Fluorine, let's look at what's happening with Navin Fluorine this morning. The quarter was pretty poor. The quarter was pretty poor. Okay, we've got our lovely AR graphics up. And you're seeing 2% down on that stock. Jefferies has maintained a hold. A little concern about departures in execution and from guidance from the management. So Navin Fluorine maybe is seeing the pain of what's happening in the sector, but specific problems over there that the market is maybe re-rating right now. UPL is another one. We spoke about it just as we went into open, and Moody's has given it a thumbs down. It's not reacting too badly, all things considered, about 0.5% down. I'm going to talk quickly about Brigade and Godrej Properties. Brigade had its numbers out. Decentish numbers. The reaction is quite muted, though, frankly, on a day like this, about 1.5% up. Godrej Properties as well is another one we should see. A Morgan Stanley note out on it has maintained equal weight, but is talking about good Q3 collections. So these are some of the newsmakers this morning that we're tracking for you. But it's a vast, expansive list, isn't it, Samina?
It is. It is indeed an extensive list. Lots of earnings reaction. Topping the charts on the sell side is Syrma SGS Technology, down 11%. Numbers were a disappointment. Product mix was poor. Last 2 quarters have also been disappointing. And on back of that, Syrma SGS Tech is trading with a big cut this morning. You've also got GSFC. We didn't like those numbers we saw. They've been hit on the top line, bottom line, margins. The counter trades the cut of 6%. Reddington, weak numbers, 5.5% lower. EID Parry as well, 5% lower on back of numbers that have disappointed the street. Timken India, markets don't seem pleased, 2% lower on earnings. NLC India as well, on back of lower numbers, is trading with a cut of 2%. So those are some of your top losers across the broader markets in trade. On the gaining side, EIH, we said those numbers were good. Markets seem pleased. The stock is up a massive 12% this morning. So getting a big thumbs up on very solid numbers. V-Mart Retail, numbers were largely flat, but the markets are seeming excited about this one. 9% gain on V-Mart is what we've got. JB Chemicals, another top gainer, 5% on better numbers. Nazara Tech is up 5%. You've also got 197 Communication. Now, this is worth a mention. Paytm continues its recovery. The stock is up 5% after gaining about 3% in trade yesterday. So, back at 470 on Paytm. It'd be interesting to see how the stock plays out in today's day of trade. The news development, remember, continues around the counter. Well, those are a few names that are moving. Britannia is up 3%, like Niraj indicated, one of your top movers on the Nifty 50 on back of strong earnings. Angel One as well on back of a 10% addition in number of families or users that they've added. You are seeing a 3.5% up move on this one. Nykaa, Tamanna mentioned, is having a good day. You've got Radhiko Khaitan as well on numbers up 3%. Max Financial Services, this was a big one on back of capital infusion. The stock seeing some gains. So all in all, it's earnings reaction and most counters seeing very sort of sharp moves on both sides. Aamar, you want to come in on the Nifty very quickly at 22,000. Would you consider or initiate a long position right now for the day?
Yeah, I would say that Nifty, what we are seeing is that from the highs of the day, the Nifty is correcting slightly. But overall, I would say if Nifty corrects towards, because if you look at crucial support zone, so that would be immediate support zone is around 21,950, 960. So if it corrects to that level, then that could be a good buying opportunity overall for Nifty.
Just a quick look at Canara Bank. They've announced their stock split. And let's pull up and see what that stock is doing. Yes Bank having another good day. Can Bank up 4.5% as well. The banking space having its day in the sun today after sulking for a bit. Quick word from you, Mayuresh, on the banking pack and where you see the opportunities there. Would you still go after some of the PSU bank names?
So yeah, Tamanna, we are a little bit more biased and selective as it comes to the space, and a few of the PSU mid-cap PSU banking stocks do reflect in our global portfolios. Bank of Maharashtra being an example. But even the large cap private banks, as an example, IndusInd Bank, case in point, or even Axis Bank, case in point, remain attractively placed. Capital adequacy remains extremely strong. If you look at most parameters, including how the asset quality has been trending and trending lower, along with expectations in terms of very stable deposit and earnings growth, that probably leads to reasonable amount of NIM going forward as well. And with the risk management practices, specifically on the PCR, the contingency provisions that they've probably done, I think the larger ones like an IndusInd or an Axis Bank still remain as hold in our global portfolios. So being a little bit selective at this juncture, but I think a few of these names is something that we continue.
Just a quick word, Aamar, from you as well on the bank pack, Can Bank especially. Considering the stock split news is showing some kind of a movement there. UCO as well is something that I'm interested to know your views on.
Yeah, I would say Canara Bank definitely very strong on the charts. It has taken out some very crucial zones of resistance. So that was around 580, and currently if you look at 550, because that was the high which the stock had made in March 2012. So that's going to be a very, so breaking that level, then it's really headed higher significantly, because it's all-time high. If I go back in time, that was in December 818. So reaching and sustaining above 550, 560 consistently for Canara Bank means that the stock has a potential to witness a significant rally. Anywhere between 20-25% upside rally could be possible. Looking at the other stock, if I look at UCO Bank again has I would say breached crucial resistance zones. So again, 55, 57 was a zone of resistance. Now on the upside, the stock has a potential to rally towards the 70, 72 levels, because the long-term trend, intermediate-term trend, and the short-term, they continue to be very strong. But yeah, so what one should do is any correction, definitely one can look at buying opportunities in the PSU banking space.
Okay, today a bit of a pullback for a Biocon, maybe a Laurus Labs and some of the others, which had a very good day yesterday. So just keep those in mind. About 0.5% for a Biocon and maybe some others as well. One quick thing, I don't know if Laurus is still in the green. One thing that we haven't discussed or maybe missed out is OMCs, because of the kind of strong run-up that we've seen already. Quick thoughts, Aamar, if you would trade any of the OMCs from these levels for the next few days?
I would say ONGC, BP, Bharat Petroleum, they continue to be very strong technically on the charts. We're seeing some sort of profit booking today, but I would say any pullback is to be used as a buying opportunity, because the stocks have breached crucial zones of resistance, and there is an upside possible. So one can look at buying opportunities in these stocks.
Okay, fair call. Thanks for that, Aamar. Really appreciate your time and joining us and giving us that perspective. Mayuresh, great having you as always. Thanks for being with us this morning. We need to slip into a very quick break, but up next, we speak to Ambit Asset Management's Sushant Bansali. Their latest newsletter speaks about a peek into rural recovery. Is that story looking very promising? We try and talk about that on the other side.